Okay, MegaWhale team, welcome back to the channel and thank you for tuning in. I hope you're all having a fantastic start to your week. In today's video, we are discussing the recent weekly candle close, the high time frame charts, the daily price action, and most importantly, the short-term charts, going over exactly what is happening, the key trigger and trends that you should be paying attention to, as well as diving deep into the total market cap and even the altcoin market. Before we get into it, smash the like button, hit the comment button, and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you are interested in, you can join us over on Telegram. This is the first link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop for cryptocurrency with Bitcoin and the relevant economic news. And if you are interested in taking your trading to the next level, you can join us in VIP, where we post trading setups with exact entries, exact targets, exact stop losses, trade justification, exclusive analysis, and so much more. You'll also get access to all of our group chats, our general chat, our trading chat, education chat, our daily video, our help, our trade setup, and our news chat. If you are interested in that, to get access to that, you can contact me in the pinned comment by clicking my name, or the first link being a 50+ month trading track record, and the second link being a 10-minute video showing you inside the channel. Let's go ahead, guys, and jump in. Now, a lot of you are probably wondering, Whale, where is your webcam? Well, to be truthfully honest, I am not feeling the best today. Yesterday I was quite sick, hence I didn't do a video. So I figured I'll get in and do a video today, but I just rather have that webcam off. So I'm still feeling quite unwell, but we figured the weekly close, very important. We got to jump in and get a video out for you guys anyway. So let's take a look at the price action, and let's start on, again, that weekly close. We can see the weekly close has literally just occurred for Bitcoin. All in all, it was a red week. We did have a large move toward the upside and toward the downside, but more or less closing towards the center of that price range of the weekly. In terms of our horizontal levels, the weekly close did not breach the weekly low or the weekly high. We're going to be going over exactly what this means for Bitcoin, as well as taking again another look at that weekly chart here on the RSI, the 62.09, and even the macro charts in terms of the 18 to 12 bar theory. Like we mentioned, we'll be jumping into the short term, discussing the recent and very important negative momentum shift occurring here on Bitcoin, as well as the fact we are approaching the apex point of this downtrend, which is a critical trigger point for a directional move upwards. And along with all of that, we'll be going over into the altcoin market, discussing how the altcoin market is looking on a short-term and higher time frame basis, and what point needs to break for the altcoin market to see the next leg upwards. Starting on that market data, let's take a look at our volume and our liquidations. So overall volume has dropped a fair bit. We are sitting at 101 billion for 24-hour volume. Now, volume in Feb in general has been falling quite steadily. The market is starting to dry up and it is getting very bored of this horizontal consolidation. If we just take a look at this price action since the start of February, we had essentially one violent move at the beginning of the month, followed by now close to about 11 days of consolidation between 94.5 to 98.3. So it's getting quite boring, the price action, but it is still very important. These consolidation ranges generally result in strong reactionary moves once we break the range low or the range high. So it's still very important we keep an eye on this channel. Taking a look at the liquidations, 108 million liquidations, with 78 million coming from longs and 30 million coming from shorts. So again, if we look at the last, say, 4 or 5 hours of price action, we can see some violent corrections here developing over the last 2 hours here of Bitcoin dropping from around 97,000 down to 96,000. And of course, over the past 24 hours, we have seen the price action come down from around the 97.7 region into that 96K region. Moving over to the DXY has retested its high time frame level of support. Provided this level is able to hold, we could see reversals develop. We are, of course, potentially going to see a correction here if we break this low. If we do drop drop below this horizontal level, we are expecting stronger corrections for the DXY, which will be generally bullish for the risk asset market, for Bitcoin and the S&P 500. For the DXY to turn bullish again, we need to break back above our most recently established high. If we break through this 109.8 region, we will then see continuations higher. Until then, we run the risk of steeper corrections. Moving to the S&P 500, it is looking very close to a potential continuation higher here. It is starting to look relatively decent. We, of course, need to see that positive momentum shift on the RSI. If this RSI breaks for the upside, that is going to be the trigger for the S&P 500 to see its next leg toward the upside. We are watching levels such as 6,400 and 6,500 as potential targets if we see that RSI break upwards. So all in all, it is looking decent. It has not triggered the bullish trigger yet. We need to break through the RSI. But all in all, it is looking like it's becoming very ready to see that move. Moving over, guys, we're going to be taking a look at the charts. But before we do, make sure to sign up to BitGet, BitUnix, or BingX. So you can do that via the links down below. You'll get an exclusive 15 to 45% lifetime trading fee discount based on your trading volume. You'll support me making the content. And most importantly, you'll support yourself in your trading. Check it out, guys. Sign up. It takes a few seconds. And we'll see you back in the video very shortly. If you are looking for a new exchange or just want to support the channel, sign up to BitUnix with the link down below. You'll get a lifetime trading fee discount of 15%, which can build up to 45% based on your trading volume, as well as access to a bonus reward center, and of course, all of the exclusive campaigns we run on this exchange. You'll also get access to BitUnix being a non-KYC exchange, meaning you can sign up from anywhere in the globe without regulations. And most importantly, I only promote exchanges I trust and I use. As you can see, I trade on BitUnix very regularly, being the highest VIP level with over $500 million in trading volume for the last 30 days. And lastly, if you were interested in signing up to our other two exchanges, BingX or BitGet, you can also do that via the links down below. You as well will get the 15% trading fee discount and everything else that comes with it. Go ahead and sign up. Thank you for supporting. Let's jump back in. Okay team, let's go ahead and jump in. And as we can see, we have just closed that weekly candle. Now, not too much has happened during the last 7 days of price action. As we showed you very briefly on the short term, we have more or less traveled between this range high and this range low around 98,000 to 94,000. Not really that much is happening here for Bitcoin in the short term, and that is basically gone ahead and developed what we consider more of an indecision candle here on the weekly. Now, if we're taking a look at the key levels on the weekly, we are still watching our weekly low. Let's make this line thicker. It's thicker black line, and the weekly high sitting at 93.6 and 104.4. This essentially is going to be the highest closing price in the weekly range ever since we broke through and developed this range, and the lowest weekly closing price within this range. If we take a look at the price action, we have seen numerous wicks above and below this range, but we have not yet seen the candle close above and below. So what are we using this for? We essentially are using this weekly range as a sort of sentiment indicator, meaning when we see a weekly candle close below or above this weekly range, not only will that act as a trigger for a continuation towards the daily low, which is the red line, and the daily high, which is the red line, but could act as a sentiment shift, meaning during the price action or during this weekly candle, we have seen a significant shift towards the buyers or the sellers, which has allowed the price action to close above a prior level of support or resistance, which has historically acted as a strong level of support or resistance. So we would generally see a sentiment shift and thus expect a directional shift. Now, if we zoom to the daily chart, we can see that the targets upon a break of the weekly low and the weekly high, we can go ahead and make these trend lines again a little bit less visible because on the daily chart, they aren't that important. We can see we have got our two red lines. We've got our weekly high and our weekly low. These levels are of significant importance because if we take a look at this price action, this is essentially the horizontal consolidation or the channel we have been developing now ever since the middle of November. If we take a look at prior macro consolidations, we of course had our macro downtrending consolidation. This was our macro descending channel formation we established basically through the entirety of 2024. This was this consolidation. We had a horizontal consolidation during essentially the entirety of 2023. And what we're noticing here, we're noticing very similar patterns in price action. We're seeing that we have these long and extended drawn out periods of consolidation, multi-month consolidations, followed by multi-month continuations upon when they break outward. So we can see how, again, we had a horizontal consolidation here. We saw a break toward the upside, and upon that breakout, we saw the price action establish a new uptrend. Over here, we had a macro descending channel formation, a bullish pattern. We had a breakout, and we saw a macro continuation toward the upside. And now, yet again, we are in another period of macro consolidation. And as we can see, the momentum has been falling as a consequence of the change in volatility from our period of larger volatility, from the breakout of a consolidation, to the period of lower volatility, where the price action has been consolidating sideways, which reflects as, again, decreasing momentum. So this decreasing momentum doesn't necessarily mean the price action is bearish, nor does it mean the price action is confirming itself that it's going to go lower. It is simply a representation of the dramatic change in volatility over a period of time. So what are we looking at for this momentum? As we can see, the momentum has been negative. Okay, it has been downtrending ever since we established that range at the beginning of November. So we could say, essentially, during this entire consolidation, momentum has been downtrending, has been negative. Therefore, if we were to see momentum flip positive at any point in time during this consolidation, this would be a data point which could signify the buyers are back in control, which will increase the probability for a continuation through our range high. If we take a look at an example on the weekly chart in our prior consolidation, such as this macro descending channel formation, you can see if we draw our macro downtrend, okay, matching our momentum. So we've got the macro downtrend over here, we have got the negative momentum over here, we had the breakout indicating a positive momentum shift, okay, and when we saw that positive momentum shift, we eventually saw a continuation through the resistance. So we are expecting a similar reaction in price action when that does develop. The question is, will we see that develop prior to a break of the support? And that is really what is happening here. Are we going to see the buyers step back in and take control of this price action before the exhaustion develops into a stronger downtrend? Now, we've talked many times about what it would take for the price action to lose its support and the impact that would have on the price action. So let's talk about the consequence and then describe what would actually require for the price to break down. Now, if we take a look at this chart here, we can see there is a massive volume gap below this $88,000 support, and of course above our daily high, 108,000, we have got price discovery. So we've got no historical trading volume at these levels on a horizontal basis because we haven't been there before. So both above, okay, and below, we have what we would call a low historical resistance range. Now, a low historical resistance range measured on a horizontal basis is simply describing the volume requirements or the price action to move from price A to price B, whether that be price A here and price B here, or A here and again B above, depending on the direction we break out. But what it is suggesting that there is a decreased required amount of volume as we push through 88,000 to continue exponentially lower. What we would expect is volatility would dramatically surge as we break 88,000 and as we break 108,000, depending on the directional breakout in the direction of which the price action moves. So if we were going to see a strong downward move, we would only expect to see that strong downward move below $88,000. So we now know the consequence of the breakdown. Essentially, a break of 88,000 would result in a very strong downward move, which in turn, we'll come back to in a second, would result in the total market cap losing its 2021 high. Now, if we see a loss of a horizontal level after we have got a bearish divergence print, that would mark this as deviation and could actually trigger a high time frame reversal. So by losing 88,000, not only do we see a correction for Bitcoin, but we would likely see a strong correction for the entirety of the cryptocurrency market. Now, if we take a look at another indicator, which is going to be on the weekly chart, we can see that historically, upon the loss of the 62.09 level, we have seen corrections spanning between 72% to 10% historically, and around about 80% of the time we do see these corrections. So again, this isn't confirming we are going lower. Essentially what it is, it's telling us there's a massive warning over here, and if we do drop any lower, that warning will result in a strong correction, which could be a multi-week or even a multi-month pullback for the entirety of cryptocurrency. Now, this is where the important information comes. For us to lose this level, for the price action to drop below here, we need to understand the market is based on cause and effect. We need to see sentiment shifts for that price action to drop below the support. So to answer that, we need to answer what is establishing the support and why has the price action moved sideways along the support now for about 2 to 3 months? And the answer to that is exactly this. The reason the price action has been consolidating aggressively sideways, has been unable to break through its recent highs, and has been unable to break the recent lows, is because of the macroeconomic indecision surrounding future interest rate decisions. Now, future interest rate decisions establish the basis of what we call perceived systematic risk, and perceived systematic risk is essentially the perception of future risk in the market. The market, by nature being forward-seeing, adjusts its price to what the perceived systematic risk is in a future period. So while there is indecision surrounding what that perceived systematic risk is going to be based on, again, the adjustments of the interest rate decisions as in accordance to developing news around tariffs imposed by President Trump, or even the development around how inflation is moving as a consequence of those imposed tariffs, we see the price action essentially move sideways as it is unsure on where to develop towards. So as long as there is indecision surrounding future economic decisions, particularly future interest rates, there is going to be indecision in the actions of investors and traders, and therefore it is unlikely we see these critical levels of support and resistance actually break until we get more clarity. And that is exactly why we have seen the price action move sideways, and that is why we are seeing this range develop. Now, if we see the price action lose or break the range, we will likely see dramatic changes in the perception of where the market is likely to go, and that will result in, again, dramatic shifts in the market itself. So we are watching our horizontal levels while understanding why this range has actually developed as a whole. Let's move over, guys, to the short term. So as we can see in the short term price action, we have got this range over here. Now, if we move over to our hourly chart, we'll see it a little bit better. This, of course, is going to be our range we are establishing. This is over the last 11 days. We've got our range high and our range low. Now, this range could essentially chop and continue to chop. What we are watching for is we're watching for the inability to sustain above its sell side liquidity and ability to sustain above its buy side liquidity. So triggers for directional moves upwards are going to be our week highs. This is 98.8K. A break above this region will result in continuations into our downtrend. And of course, we are watching for this liquidity zone right over here. This is our sell side liquidity. This price is 94,000. Again, lines up with our strong low. So meaning if we do see a correction into the strong low, this could be a liquidity grab before we see continuations back upwards. But if we do lose that strong low, it will be likely a confirmed breakout and we will see a correction back into 92,000, which if we go to the daily chart will be this higher time frame cluster of support. So that is how we're playing the short term between these levels, between the range high and the range low. Expect the price action to continue to remain choppy and expect volatility on the short term. Zooming very slightly out to the 4-hourly chart, we do have our downtrend. Again, this downtrend will need to break. If we break this downtrend, that will be the trigger for a continuation back into that range high on the daily. So until we break the downtrend, we are in a downtrend, guys. We could see that price action move downwards again because of this dramatic amount of volatility. We moved very, very far away from its trend line, hence why I'm moving now more sideways as we approach this trend line again. So again, there is a chance we see something like that and then come back down, or there is a chance we see that liquidity grab and then break back upwards. Either way, we need to see this range break, whether it be downward, deviation, continuation up, or upward, buy side liquidity taken out and established a new support before we continue back upwards. Either way, this range is of significance. Let's finish up the video on the total market cap, and we did have a few things we wanted to discuss, such as the macro 12 to 18 bar theory. We don't have time for that today. We'll come back to that one tomorrow, and we were going to talk about this. We'll come back to that tomorrow. Let's talk about the altcoin market. Essentially, there is one level we're watching in the altcoin market for altcoins to see the next move upwards on the short term, and for the short term trigger for altcoins, we are watching 940. Okay, 940 billion on the total 3. If we break 940 billion, that is the trigger for a stronger move upwards. We are watching for a move to 1 trillion. So Whale, when are you going to enter altcoins? When are you going to take altcoin positions again? I'll probably enter altcoins for short-term trades, not spot, just leverage short-term trades. When we break that level, watching for continuations to 1 trillion, okay? And if we zoom out to a higher time frame, such as a daily chart, you know, what are we really watching here? We are watching, most importantly, that daily momentum. So again, the RSI, we want to see that RSI break through. If we do, we will see a continuation to 1.13 trillion for the altcoin market. Until then, we are in a downtrend. Until then, we do run the risk of lower prices if Bitcoin does correct. Thank you for tuning in, guys. Have a fantastic day. Catch you in tomorrow's video. I will see you then.